Assalamualaikum. Today we discuss about how do interest rate affect your mortgage. The impact if the war in Ukraine has an impact on petrol price and cost of everyday items, the economic uncertainty it creates is also making the Bank of England shine on rate trigger. The idea of raising interest rates is to keep those current and predicted price rises measured by the rate inflation under control. In the face of global, this may be a relatively blunt tool. All eyes will be on the bank's long-term strategy. For now, policymakers have increased interest rate to 0.75% from 0.5, the third rate rise in 4 months. How big could UK interest rates go? Higher interest rate make borrowing more expensive for households. That could mean higher mortgage cost, although for the vast majority of homeowners the impact is not immediate and some will escape it entirely. An improvement on saving rates is likely to be far outweighed by the falling value of money put away. Homeowner impact. Recent years have seen an extraordinary period of cheap mortgage, but even before the Bank of England rate setting monetary policy committee began increasing interest rate in December, there were signs that the era of ultra low mortgage rates was at an end. Some lenders have raised rates for those applying for a new home loan. However, brokers have predicted a new rise in mortgage rates, the slow and measured, which would mean mortgages would stay cheap by historical standard for some time. It is a title discussed fact that only about a third of adults have a mortgage. About a third rent their home, another third have either never had a mortgage or have paid it off. Those figures come from the English Housing Survey, which is geographically limited but one of the most comprehensive guides available. Some 74% of mortgage borrowers in the UK are on fixed rate deals, so would only see a change in the inner repayment when their current term ends. According to banking trade body UK Finance, but 1.5 million fixed rate deals will expire this year, and another 1.5 million will do so in 2023. Of the remainder, 850,000 homeowners are on tracker deal and the other 1.1 million are on standard variable rates. They are the people likely to feel an immediate impact now the bank rate has risen. The increase in the bank of rate to 0.75% mean a typically tracker mortgage. Customers' monthly repayment will go up to dollar. The typical SVR customer is likely to pay $15.96 more a month. UK finance figures show this is on top of similar prices in previous month. What are interest rate and why do they matter? UK prices at fastest rate in 10 years. That means a further on household budgets at a time of rising bills and when people have been used to years of cheap borrowing and relatively slow rising prices. Every mortgage application since 2014 would have needed to prove in a stress test that they can pay at a rate of about 6% or 7%. The idea being that a small rate rise may be uncomfortable but not unmanageable for homeowners. However, the Bank of England is planning to drop the requirements. with a consultation on the proposal closing in May. Time to save. Any improvement in saving rates will have a very limited impact on the value of money tucked away, given that the spending power of these funds is being eaten away by inflation. Analysts warn that there is no guarantee of the higher bank rate being reflected in better returns on saving. Savers are often borrowers too, but the money is in the bank has effectively been falling in value for some time. And a boss of website saving champions said it's really disappointing how slow a lot of providers have been to react to Bank of England's base rate riser. People are receiving in interest for every $100 they keep in saving for a year. A bank rate rise will do little to change that censor. The average interest rate for an easy access account you can open today is 0.2%, up from 0.17% in December. For easy access account closed to new customer, it is 0.26%, up from 0.22%. The highest paying easy access account has an interest rate of 0.84%, up from 0.71% in December. In the past 5 years, the best easy access saving rate on the market was in September 2019, which paid 1.6%. Higher interest rates make borrowing more expensive for house loan. That could mean higher mortgage costs, although for the vast majority of homeowners, the impact is not immediate, and some will accept it entirely. An improvement on saving rates is likely to be far outweighed by filing value of money put away. Some lenders have raised rates for those applying for a new home loan. However, brokers have predicted any rises in mortgage rates to be slow and measured, which would mean mortgage would stay cheap by historical standards for some time.